Nigerian energy firm Seplat Petroleum Development Company has released its full-year results for the year 2020. Revenue was down 11.3% to 190 billion naira, while gross profit also down 63% to 44.8 billion. The company declared an operating loss of 11.4 billion naira and a loss before tax of 28.9 billion naira. Joining us to discuss these headlines is Owade Osade, Chartered Financial Analyst, Senior Vice President of Investment Research at FBN Quest Merchant Bank. Owade, thank you so much for joining us. So glad to finally have you on the show. Good morning.
Good morning, Rotus.
I want to first ask, the visit of the central bank governor to the Dangote Refinery, there's been talk of possibly selling crude oil to Dangote Refinery in Naira. What do you think the impact of that would be?
Well, I think selling crude to refinery does make a lot of sense. If you think about it, the net dollar inflow from a crude purchase for a local refiner is zero, but however, it could place considerable pressure on FX rates, if the refinery is required to buy dollars, it will displace current demand and shift demand to other markets, such as the black market and NAFEX, possibly raising rates there. So it makes a lot of sense, generally for the country, and it's in line with the broad government policy for product import substitution.
Fantastic. What about this reports of the Dangote Group's Chief Strategy Officer, Aliyu Suleiman, saying that, I believe this was to a National Assembly Joint Committee on the PIB that visited the refinery, saying that there should be a tweak in the petroleum industry bill that only allows refiners to import fuel into the country. What do you make of that? If that was to go forward, the impact would be and what it would mean?
Well, the whole essence of encouraging local refining is to eliminate the need for imports anyway. I think everyone is on board with this view. We have seen across sectors such as cement, sugar, and fertilizer that this sort of policy has worked to achieve the federal government's objective of boosting local productivity, promoting import substitution, and creating jobs. If this path is taken, perhaps at some point we could see, an substantial increase in local refining capacity, as well as exporting of products to neighboring African countries.
Thank you so much for that. I want to get to Seplat. I think you were on the conference call not too long ago. They just released their full year 2020. Mm-hmm. Any notable highlights from the Seplat results? I want to start with that.
Well, fundamentally, the company, the pandemic had its impact on 2020 performance, most especially in Q2. Seplat had to make an impairment of oil assets, which led to a $144 million hit on its books. But operationally, the company is in a strong position. Working interest production did increase by 10% to around $51,000 per barrel of oil equivalent. This comes despite OPEC plus quotas and reduced demand earlier in the year. Seplat also successfully completed its work plan for the year, bringing on stream 9 additional wells. Its cost-cutting initiatives also paid off. Production costs averaged below $9 per barrel on average. The firm's balance sheet remains quite strong. Its cash position is really solid. It has no problem servicing all the obligations currently. So I think the results were quite decent.
Now, but okay, decent results, cash position okay, balance sheet looking strong. The results still reflect the impact of the pandemic on the oil and gas sector last year?
Yeah, surely. So Seplat reported a loss. Like I said, the loss principally was because of the impairment of oil assets, which clearly resulted from oil prices selling around $20 per barrel in Q2. If you look at it, for instance, that $20 per barrel, which was the realized average oil price for Seplat during that period, showed a 70% year decline. So clearly oil prices hit Seplat's numbers, but my view is the business is in a good place. even though it had a difficult 2020, which was due to external factors.
Great stuff. So on the conference call that you just had, they had the analysts and everyone else. Did they give any kind of earnings guidance for 2021?
Well, Seplat doesn't give guidance on earnings, but they do give production and capex. So capex guidance is 150 million for this year, which is sort of flattish because that's what was spent on asset investments last year. For production guidance, it's within 48 to 55,000 barrels of oil equivalent per day, which is a slight uplift from the numbers that it delivered this year.
Great stuff. All right, so if that's the case, I mean, you said the balance sheet is looking strong and the things are optimistic, and those capex guidance is flat. In a minute or so, how are you viewing the stock? I think the stock closed on Friday flat at 550, didn't move. How are you viewing the stock for the year? If you about 30 seconds quickly, if you can.
Yeah, we're quite positive on the stock. We have an outperformance name. If you think about where prices are today, north of $60, production is up 40% year on year. As at Q4. If you combine those two views, it's quite clear to tell the direction of P&L, of Seplat's P&L for 2021. And this is, not even considering additional production flow from ongoing field development execution. So we are quite positive on Seplat's near-term outlook and also its medium-term position.
Great stuff. Owade Osade, Senior Vice President, Investment Research at FBN Quest Merchant Bank. Thank you so much for your time. We appreciate your insights on oil and gas.